Wednesday, October 12th, 2016, Monaco 64, home of alternative economics and contrarian views. So I like to talk today about the UK gilt market, and gilts are basically the equivalent of treasuries, government bonds in the UK. And the reason I want to talk about it is because they're very important. They determine all the interest rates in the economy in the UK. There's been a lot of emphasis, you listen on the mainstream media, on the radio, that the FTSE's making all-time highs. But that's, of course, because of the currency, the pound, getting, hammered so much in the last few months, and especially in the last, since the beginning of October, we've gone from 130 to now 122.60. The low yesterday was actually 120.85. We've rebounded a little bit today, about 1%. There's some news about Brexit. Prime Minister May is saying that she will have a debate with Parliament before she triggers Article 50 to get out of the EU. There's still a lot of uncertainty though in the currency markets, and I haven't changed my view. And the reason I want to talk about gilts is because the UK economy is heavily dependent on credit, for consumer credit, for the housing market, for the government. The government has huge debts in the UK. So if interest rates start moving, it's very important. So I want to start talking about the individual maturities in the gilt market. So I'll start with the 2-year gilt yield, and that's easier to control for the central bank, the Bank of England, because it's a short-term interest rate, the 2-year. So we can see that in June, June 23rd, the day after that, that yield dropped from like 0.52 all the way to below 20 basis points because of Brexit and the fact that the market expected the Bank of England to cut rates from 0.5% to 25 basis points, which they did. So the 2-year yield actually reached a low on the 28th of September. It reached a low of 7 basis points, so almost near zero. But since then, we've gone up to 0.216 basis points, so 0.216%. And looking at the chart here for the last year, that seems to be a level where there's resistance ever since Brexit. That 2-year yield hasn't gone back above 0.2, but today it's up 3.5 basis points, and it's starting to creep up above that 0.2%. So the 10-year yield or 10-year gilt, which is not as easy for the central bank to control. I guess they could, they've announced more QE in the UK. They could try to do that through QE. But looking at the chart here, so prior to, let's say, Brexit, the rate was, earlier this year we were trading around 1.5%, and then just before Brexit, it was 1.38%, the 10-year yield. And after Brexit, with the Bank of England coming out and say they're going to throw everything at it, cut rates, the 10-year yield reached a low of 0.518%. And that was in the 12th of August. And right now, though, it's it's the highest it's been since the end of June now. We're at 1.03%. So it's up 5 basis points today already. And it's basically doubled since that low in August, the 10-year yield. And the reason why I'm talking about these is that longer term interest rates, they set mortgage rates, and they're important. So now we go to the 30 year. And the reason I go to the 30 year, mortgages in the UK are based on the 10 year, but the 30 year is important, I feel, because the UK government, its outstanding debt held by investors, the maturity of that, average maturity of that debt is about 16 years, which when interest rates are low is an advantage because they're paying less interest on the debts and they can finance cheaper. But when interest rates start rising and they have to roll over that debt, the cost of financing will, could balloon. The UK has got almost the average maturity of UK debt is almost basically double the average maturity of all the other OECD countries. They're around 8 years. So looking at the 30 year, the low was 1.24%. That was the 12th of August, just like the 10 year. And today, though, we are at 1.734. That's up 6 basis points. So, and prior to Brexit, this rate was above 2%. Beginning of the year, we were at 2.66%. So there's still a lot of room on the upside. And now what I like to talk about is the differential between the maturities, which is the yield spread. And basically, when that spread starts, the differential from shorter term maturities to longer term maturities starts widening or getting bigger, it means that investors' expectations of inflation in the future are rising. So, and that's not surprising because with the pound dropping so much and becoming worth less and less, things are going to get more expensive. It's just normal. So I've had a look here. Since the 12th of August, for example, the yield spread between the 2 year and the 10 year was 38 basis points, so 0.38%. Today, it's 81.3. So that's gone up almost 50 basis points. For the 2 year and the 30 year, the differential was 110 basis points on the 12th of August. And now we're at 151.7 basis points. So that just means that investors are starting to get worried about inflation in the future in the UK. And I also think it could, because most people think that if the Bank of England keeps rates near zero, that their mortgage rates and mortgage financing won't go up when they come for renewal. They will have a shock, because if we continue to see longer term interest rates rising, mortgage rates will rise, and that could trigger a huge slowdown in housing or even a collapse of prices, which goes hand in hand with that Webbot report from about 2 months ago about London, especially in the UK, hitting a wall, the London economy. So I think, this is really important. I think the US Treasury market as well is starting to show signs that, the Fed's kind of losing control and that inflation expectations are actually rising. We are near multi-month highs here in the 10-year yield this morning. We're at 178. I think yesterday when I made a video, it was 176, so still rising. The 30-year yield now in the US is above 2.5, is 251. So that's what I wanted to talk about. Yeah, keep a look on the FTSE. It's above 7,000, but keep an eye on the gilt yields. You can find those. Just Google gilt yield on Bloomberg, and you get the rates. So what are the markets doing this morning? It's around 11:30 London time or 6:30 New York time. Gold is at 12.55, up 2.5. The Dow is down 5. Silver is at 17.50, roughly, up 5 cents. The pound, as I said, has rebounded this morning. It's up just over 1% at 122.65. The euro is slightly weaker at 110.16, down 1/3%. So that's all for now. If you enjoy my videos, please like, share them, and subscribe to my channel if you haven't yet. And if you'd like to donate, there's some links below in the description. Take care. Bye.